You will know about the startup story.
So we have seen all the technology part, how it is used in use cases, some examples of how it is currently understood in some business, banking and financial processes, trade finance, stock markets. This is the last module of this entire lecture series. And I just thought yeah, we have understood technology, we understood business cases, we have understood implementation strategies, we understood cryptocurrencies. We have seen some of the length and breadth of some of the topics, but it will not be, I just thought it'd be easy for us to even see like how you can do a startup story, or how you can engage yourself in the blockchain specifically for financial applications. I'm trying to bring in whole research that I've been doing for last couple of years in the fintech area in various things, and I just wanted to throw this in the next couple of slides, how the behavior is changing, a story of an enterprise, a story of a startup, a story of small and medium business, and how actually financial technologies is actually embracing the technologies like banking, stock markets, anything to actually improve the business processes. So it's just a run through story, and this will conclude the end to end of the whole lecture series in financials. So banks and actually fintech startups have a strange relationship. You know, from the day one, I've actually covered 90s. They're actually been close to them. There is a symbiosis. Basically, the big companies invest in startups, and they also invest in some kind of they create startup ecosystems. They give accelerators. You have a lot of examples, right? Starting from JP Morgan to Citibank, everybody does that. So there is a strange symbiotic relationship. The reality is that which one to survive, and one is there is a common dilemma to scale, and whether they are having external innovation, the internal innovation that they bring in, can they support their external innovation to large enterprise. The reality is that you need to see if they will survive. That is the most common thing. you know so you will see in 2015 robo advice started, Apple Pay started. These are disruptions in the blockchain. These are the disruptions in fintech area, right? There was also this masters joining cryptocurrency. These are some of the snippets I picked up from headlines that I picked up from 2015, just as an example. So in 2016, blockchain technology started. Crowdfunders started doing ICOs. The fintech revolution became more joinable with the online lending club. Then was a acceleration between banks like UBS and Citibank and JP Morgan to come out and then see if they can give a crowdfunding for any ledger technology, distributed ledger. So these are some of the things in 2016. What is essentially is over the last 3 years, the World Economic Forum has been deeply engaged with the drivers of fintech revolution. So they've been one of the instrumental people. So you see on the left the industry incumbents, the leading innovators, and finally the workshops. You have from most of the cities like Davos to London to Hong Kong, Tianjin, Boston, New York, where they've been doing some high-end workshops for fintech. And it's been supported by Santander to HSBC to Deloitte to Barclays and to all the capital companies. So you name the leading ones, who's and who's, including BitPay and all Coinbase, which are even the blockchain kind of technology companies, right? So it has been deeply engaged. So what is I've kind of understood this entire thing, whole framework for disruptive innovation in financial services. One, you have basic division as payments, insurance, deposits and lending, capital raising, market provisioning, and investment. So this entire spectrum, we have seen some of them in how it happens in blockchain. I've given the deep dive of some of the good use cases that goes into this entire one-to-one consolidated framework. So fintech firms, they provide customer services, they provide value-added services, they enable technology support. So it's a spectrum. So any company which is trying to get into fintech should actually have all the three pillars. So the first one is customer experience. Some of the thing is like proactive insights. They should provide higher personalization, better functionality, interactive interaction, speed of governance. This is like more towards like AI and ML, like artificial intelligence and ML, machine learning, where you can use this for getting the high customer experience. And there is one innovation that I just want to mention here is TransferWise. It's one of the good apps that is in it meets large profit pools. So this is one of the good app, that really takes care. So you need to understand the deliberation that's happening in innovation of financial services, and it really helps. These are some of the examples: on deck, flat, wealth front, funding circle, crowd club, Future Advisor. All these companies are actually platform based and data intensive and capital light. These are some of the examples that you can actually look into. There is something like, even Barclays is coming into Barclay card with just touch pay ID. So it's like competing with each other, right? It's just not about startups. It's not about banks. It's not about large enterprises. Everybody. So they're leveraging the infrastructure, so it keeps going. Basically, the thing is like, you should have a complementary capabilities between the startup and the complement and the enterprise so that it makes partnership logical. But it's also less difficult to implement, that's another thing. So how it is like, you have just create the startup ecosystem, right? Attract the customer, provide what customer wants, do research, build offerings, product services, and fulfill, and then probably you can even scale the support. So the symbiotic relationship is existing. There should be only one thing: you should have the right advantages between complementary partners, and it should have right collaboration procedures and a successful request commitment and agility in from fintech. So you need to find right partners. So we need to identify that and then share right partners for collaboration, and it requires commitment. So as I said, it should have advantages and challenges, making collaboration a win-win, and it should focus on the agility, and it should not have that legacy, burdens of legacy systems and also regulations, and it should be like competitively advantageous and trustworthy. That's also important, and also they should be able to scale up using coming out of their challenges. That's more important. And then it should non-segmental. It should be actually having good brand name, and it should be having expertise in handling regulations. You should have the robust partner ecosystem, basically, which is having customer centric products and services. So essentially you have 4 points here. You should build the trust, you should have distribution infrastructure, and it should be not underserved by traditional financial institution. You should always look at a high growth, high scale, and a robust partner ecosystem. These are some of the crucial things that goes hand in hand for the startup fintech collaboration. And you should have a competitive metrics. These are some of the things: more agile, enhance customer experience, new product development, cost reduction, innovation in existing products, and improved data management. So we need to be very competing enough, in this entire landscape to protect actually, ourselves from the, launch of. So collaboration is basically you should have a fintech firm, traditional financial services firm. There should be a mitigation plan. So only thing is that you on the left hand side you see a kind of collaboration hand to hand. It should have good risk management, have infrastructure. It should be able to give away with the good regulations, have customer trust, have economies of scale, brand name, and capital. That's like traditional financial services that can bring in that thing. And fintech firms, they can be agile. They have be innovative. They should look at cost reduction. They should bring that customer experience using technologies. They should be able to have viable new products and data handling. So a traditional, this is like a wheel. A wheel goes with a supplementary wheel, as a collaboration. That's how the entire landscape should be built, in the fintech startup collaboration ecosystem. And basically this is already given. Again, I think may just want to emphasize that the same thing is picked up from one of the surveys, and how each capability brings in, in terms of the partnership. But only one thing is like customer preferences should be more important, rather than self-directed financial management. The reason being, the role of the wealth advisors is changing time to time now. And the other thing is, you have retail investors have got good set of capabilities, and they are giving a lot of tempo changes, which are commoditized. So you are seeing some of the examples like Quant Connect, Quanton Pion, and Estimize, which is like accelerating the tempo at which the active strategies are emerged and, are commoditized. So yeah, some of them are not customer facing, but these are some of the examples like fund apps can show. So basically what I'm trying to derive is like, I'm just running through the slides in terms of giving you some options how fintech is changing the landscape with the enterprise versus, startup story. And it's not just starting there. You have fintech is delivering new capabilities and unexpected efficiencies. The primary objective of fintech startups should be actually, some of them say that, you should have collaborating with traditional firms, but 75% of the people agree that you should collaborate with traditional firms. 5.5 people say that, person say that they have to get acquired by a fintech firm, or they have to get acquired by a traditional firm, or compete with on your own, which is 18.1. This was a survey reported in 2017. So what is the challenges? You have traditional firms sometimes lack agility, so you need to bring that. Fintech firm should bring that kind of compatibility. Villas of partnering. Traditional firms may not be looking at partnering. They also look at cultural fit, because they may be younger generation in the fintech firms. Regulatory burden, they will always be very regulatory oriented. IT compatibility, because they may be on legacy systems, so startup will need to work with that. Product service cannibalism. In the initial startup way, you don't even know some kind of differentiation. Then scale of business, terms of partnership, fear of losing control and distribution. So basically, these are some of the challenges that every company has to overcome over course of time. So we need to identify the percentages, and then work towards this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There are 10 factors that actually helps you to build your startup. Now you have process automation and new information platforms, but this is also disrupting the whole benefits of scale. In many aspects of financial services. So the traditional method of financial services actually running through very shortly, because of this.
Here is the end of the session. In the next session, we will understand all the blockchain learnings and challenges. Thank you. Welcome to another session of this module. In this session, we will discuss about blockchain learnings and challenges. So let's jump to the session and know more about it.
Also, the startup ecosystem and the financial services has been automated through acceleration of many machine learning and artificial intelligence. So this will kind of automate unexpected processes, right? So blockchain is also disrupting along with AI and machine learning. The whole thing is going to bring in the transformative effects, to the whole financial services landscape. So the expanded roles is like, you actually, the role of humans will come down, but we might expect much more disruption. Actually, we have to wait and watch how the entire replacement of mundane tasks is already replaced by the machines using RPA or robotic process automation. So as we have seen, distributed ledgers like blockchain are built on complex mathematics, cryptography, and game theory. But technology is at best when it has a set of capabilities. Yeah, they may be having a lot of theoretical thing, but it has to have a use case applications, and it should bring business benefits. That's the most important thing. So the new blockchain has the potential to redraw the whole financial services ecosystem map. We have seen that. I've explained to some of the great extent how small processes are getting transformed in blockchain. So basically, blockchain will drive efficiency and disintermediate existing players. So what is going to happen? It is going to bring in transparency in markets, transparency in lending, transparency for regulators. So first and foremost, it is going to bring in the disruptive impact of increased transparency. So we have seen some of the fintech area, how fintech and enterprise can go together, some conditions mapping. Now you are seeing how blockchain actually can enable the entire thing, in the ecosystem. Other implications can include embedded regulation, reduce settlement time. You have seen from T+3, T+4 to real time. Also reduce counterparty risks and a shifting role for central counterparties, right? It doesn't have to be a centralized management in the blockchain, because it is immutable, it is agreeable within the ledger. You have very few participants, actors. So secure, and like data is shared, and it lies for at one stretch to all of them to watch. But again, building the distributed financial infrastructure will be long and complex process, but it remains to identify who are the winners and losers. It's like you toss a dice and you see what's the probability of choosing, right? It may be 5C2, 5C3, or factorial 5. Similarly, we'll understand whether what process is important, what process is not important, and then we'll develop and scale the blockchain financial infrastructure. And then cryptocurrency exchanges are coming up. This is a new generation investment pattern. They are placing a role used for whole consumers today, because at least a lot of people are investing in cryptocurrencies. And but yeah, how banks will merge with them, or they will become a bank, or they're already having a bank kind of stuff. We have to wait and watch in future how the entire things shape up. As of now in 2018, there are a lot of exchanges, at least one per country. Then there is also brokerage ones. Again, this is something similar to like a centralized asset database, and there is a brokerage similar to your stock exchange brokers. Again, these are happening because of the decentralization ethos. We need to wait and watch how the entire thing is holding on. But the thing is, they're tied up to exchanges, so they have to have a brokerage kind of stuff. Wallets is picking up. There are many choice of wallets. You have a smartphone, you have web based, you can hold the currencies in fiat form, cryptocurrencies. These are some of the new generation things that's coming up in the fintech area, right? Hardware wallets are also there. So basically, it should when you have a private key, and then you can hold it in any of the wallet like Trezor or KeepKey and things like that. Microtransactions are happening. You saw like platforms like Kasha, which is transferring the cash from one foreign country to another within seconds, and the transaction cost is also cheaper, right? So innovative use cases are being developed with publishers, and basically the cryptocurrencies may with microtransaction exist. Yeah, we need to identify, we need to check how it fits to the how the fit for the blockchain as actually being scalable with the entire microtransactions. Investment and loans is changing. You have some robo advisor startups, and they're challenged by blockchain ones. Basically, they need to add blockchain to their offering. So it's a whole fledged. We have seen this, right? How load syndication is happening on blockchain as a use case. Money services. This is again simple, but even how non-cryptocurrency companies like many companies like Western Union may not exist after some time, because they're charging huge hefty amount as brokerage. So the global corridor has actually shrunk, and this will actually the global remittances will become more and more accessible for many people, right, at a very affordable cost. Capital markets, we have seen this. Even companies like Nasdaq and others are actually looking at, and what volume of transaction is actually flowing. So we need to identify this and go ahead with how this can impart, the changes in the whole ecosystem of capital markets. Trading platforms, again, you have new kind of trading. You have derivatives, bonds, stocks, all on cryptocurrencies, and you have fiat cryptocurrency changes also. Their market liquidity is changing because of these trading platforms. Merchant services, they are kind of e-commerce companies, and some companies are just based on Bitcoin e-commerce. The integration with websites are still tricky. Will traditional merchant processors add Bitcoin to their arsenal, right? These are some of the questions that we need to answer using these merchant services. Compliance, exciting space. We need to check. There are a lot of startups who are developing their products basically to just protect anti-money laundering on blockchain. The trend is moving towards compliance, and then will traditional anti-money laundering integrate these blockchain offerings? I've seen some of the companies I've listed here. So it's again changing the way it happens. Financial data analysis is very embryonic, but cryptocurrency doesn't bother about money markets. So is there any Bloomberg of crypto emerge? In 2018 it started, but then we have to say again, these are some of the companies which are focusing on the financial data. Trade finance doesn't have to repeat again. I've seen end to end. I've given you as an entire thing. We have spoken in length about Everledger. We have spoken about provenance. So these are some of the companies which is trying to transform the whole way of authenticity, reducing the supply chain frauds, whatnot. This is a game changer, definitely. ATMs, you have Bitcoin ATMs, you have cryptocurrency ATMs. So it's just not about just going and buying the fiat currency from bank ATMs. They're completely now ATM manufacturers are kind of shifting to the alternate services, including virtual currencies. Banks. So you are getting a lot of banks serious about blockchain. They're funding accelerators. They have some internal committees. They have some thought leadership programs going on. They're investing in leading consortia. But then again, will how fast it will permeate using blockchain is wait and watch. Payroll and insurance. You have seen some of the insurance at least, but seed ideas are percolating in the insurance space at least. Payments, several use cases, both B2B and B2C. But then how to embed with the existing popular use cases is what we need to see how it can get scaled up. So even services is picking up, blockchain services. It's like potential upside for banks. Like they don't have to wait and watch. They can just give it to the consultancies and they can do outsourcing. So this also is started with blockchain services like your legacy services or service management. This is also started. This is one of the big games. Software development. Many companies are coming out with the software development. Each company can develop their own blockchain apps, and no big winners yet. But then standard development packages will be there, and it will emerge, over time. So some of the companies are OpenChain, Blockstack.io, Manifold Technologies, Blockstream, and stuff like that. General APIs. This is started, but then we will see how Bitcoin programmability can. It's been extended. We have to see how other platforms are as scalable as for general APIs using their API infrastructure.
That's all for this session. We will cover success story in the next session. Thank you. So, as we have discussed before, we will cover this success story in this particular session. So, let's get started.
So we have seen some general APIs. There are some even specialized APIs. You don't have to build the entire thing. There are open asset APIs that you can actually work around to create digital assets, tokenization of assets, vulnerable verifiability of data processes using blockchain. So there are a lot of companies like Tyron, Colored Coins, Bitcoin.io. These are some of the companies which are actually giving specialized APIs. So if you are an enterprise, you just have to plug them into your enterprise and then start working. Basic thing is to identify the use case and then see which technology can help them based on the use case. So apart from this, we have seen nitty-gritty of cryptographic constraints, and there are a lot of blockchain platforms. You have Hyperledger, you have Tendermint, you have Monetas, you have Applied Blockchain, you have Counterparty. So basically, these are the protocols. Actually, they don't have to do anything; just have to use them and then compete, and then just do mass adoption, of the blockchains. Be it Hyperledger, they have their lot of use cases. Like Blockstack, it has got a lot of use cases. Applied Blockchain, I personally use in many companies. Zero Coin is coming up. So you name the platform, right? It's just basically make sure that you have a critical mass of adoption. That's the only thing required. Smart contracts are a big promise of blockchain. They are the still hard to master for an average developer. Um, this just not about basic Ethereum smart contract. There are other. You have Ethereum blockchain as a service. Completely. The other companies which is going up is smart contract. You can look at is CoinSpark. Excellent company to see. Tembusu systems also growing. These are some of the great startups. Public blockchain. It started. You start with Bitcoin, but then you have Ethereum. It's a viable blockchain alternate. So let's see how this entire thing is growing, and 2019 will be a good year for this. Special blockchains, we have seen some of the other ones. Example like private blockchains, you have Ripple and Stellar, and they might make sense as private blockchains because more and more public blockchains actually crowding the mechanism and transactions are getting slower. So we need some special blockchains to make sure that there is a longevity of the purpose that what we are building for blockchain. So Ripple is growing, Stellar is growing, alternate to Ethereum. Payment protocols, they basically carry the monolithic to microservices based native macro transactions on the blockchain with flexible programming capabilities. That's what I said. It's from moving from monolithic to microservices. And there are some of them like Lightning Network, Monero, and other payment protocols, including Kasha, which is a great example. So we have to see how this entire story develops. Miners, I've seen like it started in 2009 where a laptop and desktop actually you can mine a Bitcoin, but now it is not the same. You need 1000 kilowatt of power per hour. So there are, as I said, you can join any of the mining networks. Basically, to just make some money using the nodes and create proof of work. And it's just not about Bitcoin, but you have other blockchain mining, example Ethereum. So these are some of the companies like Antpool, BTCC, Bitfury. These are the 21 INC. These are the companies where you can actually take your share of Bitcoin. Bitcoin is still trading at $4,000, so it's not a small amount. So you have some of the most funded companies, blockchain, and this is as of 2017. Yeah, but it's like increasing day in and day out. So you have Coinbase, Bitfury, Digital Asset, Bitmain. Some of them got some second, third generation funding as well. So what are the challenges? Good intentions to develop blockchain-based things not enough. You have to get your hands dirty. Don't outsource the learning. Get your minds dirty. Try some ideas even if they fail. Failing is okay for startup, but can banks learn to fail? Yes, maybe not. Integrations will not be easy. Blockchains or applications are different, but they must be written. So the challenges are there, but at the end of the day, whether it's a startup or even an enterprise, the reason why I'm bringing is this is just not restricted to large enterprises. Not restricted, sorry, my apologies. Not restricted to startups. This is like creating a new startup inside the law organization, like even Santander Bank or JP Morgan. Because the blockchain is going to be Web 3.2 as they predict. There is going to be a lot of implications. Applications going to be transformed. Intermediary is going to cut. Immutability is increasing. Data nodes will change. Multiple records, system records are going to get away, and it's just decentralized processing. So you can fail. What I'm saying is you should need to take blockchain as a step by step baby, and it should be written properly, not to execute. Opportunities are heavy because everything that what blockchains can solve, and it also co-creates opportunity because it is going to take a paradigm shift. It's going to start in the new fields. I think a bank without a blockchain is going to be laggard. So there's going to be opportunities area, and forget about integration other stuff, but just focus on use case shifting and how it's going to help. I guess like a blockchain strategy has to be a part of every organization. So recommendations: invest in blockchain technologies, learn how to write smart contract, create tokenized assets, data processes in the blockchain, interact with the blockchain APIs, program a blockchain. Don't outsource these tasks or you will be outsourcing your learnings. So pair a business manager with a technical person to uncover innovations. So these are some of the recommendations based on what we have seen in the past and currently when I'm interacting with a lot of folks. So this is the innovation cluster which I've already shown you. The various segmentations. It's a 6-path segmentation, and you have some companies. It's already coming through. So you have advanced algorithms to P2P lending, to virtual exchanges, to smart contracts, to retail algorithmic trading, to emerging payments, to everything. So this is very important. These are some of the startup companies in 2018 based on some of the use cases: mining, exchanges, wallets, payments, infrastructure, blockchain, innovate, gambling, services, financial services, not. So identify the right people, use funding, have early traction, and build to scale, and do a scale up rating and certification and get hands dirty and then make this company as a successful company. So commitment is important. There is no one size fit for all approaches. There is no one size innovation aspect, and most work through incubators, accelerators, hackathons, and venture funds. And most fintechs importance of CXO level because it has to be buy-in at that level. But have a co-creating vision and objectives for a successful collaboration, and have a white labeling model, in-house solutions, and leverage APIs. And basically get out of the struggle and make sure that you can always look at how do you innovate and keeps both financial services and technology together with a successful collaboration. So there are some Berlin-based blockchain startups which I just wanted to bring in. You can just read it for yourself. So basically, I'm just reiterating areas to consider: and ensure leadership buy-in, establish business objectives, align expectations at the start, gain access to incumbent firms or infrastructure, ensure cultural compatibility, and have define ownership of intellectual property. And on the other side, during collaboration, we have contingency plans, monitor continuously, have dialogue with stakeholders, and develop monitor indicators. So areas to consider, very important. I'm not saying from a startup point of view. Even you are creating a new blockchain team, please make sure that how you viably sync up with the senior management inside the organization. Or if it's a startup, then make sure that if you're a part of incubator, you want to sync up with the financial services organization. These are the things to consider before and after and during collaboration. Bring focus into blockchain related activities, removes obstacles to blockchain implementations, shares what every department is doing, lubricates best practices, project managers across various implementation, paired with IT and external and internal as evangelists, and identify what banking operations and technology implementations, and experience in re-engineering and blockchain enthusiasts. So this is what I call it as a blockchain Czar role, and his entire focus is on role, and this is qualification that is required. So this will be a more sought role in future. It's already started with some companies, but I just want to see institute the blockchain Czar role. Very important. I've listed the role and qualification. This just identifying things, but this is just not restricted. You can keep growing this role and qualifications. So I've covered the entire startup ecosystem. Startup ecosystem for me is basically identifying what is there in the business process, and what should go as a part of the blockchain, how the use case will bring value, or how do you overcome the challenges, and innovate in the innovation, and finally identify and commitment, and cut this entire area of consideration and have a blockchain SAR role. That's all it is. So startup again means, I mean to say, starting a new unit inside the large organization, or a actual real startup. So both exist together in this entire blockchain. So overall, We have seen 8 modules in this. We started with how financial system starts. We started what is distributed ledger technology. Then we moved on to the basics of distributed ledger technology and blockchain. We had advanced and intermediary concepts on cryptocurrencies. We saw some of the terms like initial coin offerings. We have seen what are the various technology platforms that support business financial organization, that is Ethereum, Hyperledger. We have seen some of the great use cases in simple, in advanced stages. We identified what are the use cases, how this use case generates challenges, and what should be considered. We also went in completion with the new technology platforms end to end, and finally we saw how you can enable a startup within a enterprise, or actually inside the organization, or as a startup company. So end to end, I have tried to cover the most critical aspects of blockchain technology, distributed ledger technology for financial services. Hope you had good learning out of this entire lecture series. Thanks a lot for my patience listening.
Wish you a happy learning. Thank you.